Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and our guests today are Dr. Milan Sombarak. Welcome to the show, Milan.
Thank you for inviting me. I'm delighted to be here.
Great. And Jim Eat from It Foundation. Welcome to the show, Jim.
Thank you, Sasha. It's a green Wednesday. I'm happy to be here.
Yes, it's yet another Wednesday. The market is rolling. And I wanted to mention some interesting thing is I don't know if you're following some of this stocks, so-called quantum computing stocks, and namely D-Wave and Rigetti Computers. And what's interesting is that the stocks with, in some cases, no revenue, in some cases, uh, the sale Rigetti Computers, they sold something worth $5 million delivered in second quarter of next year, and they're jumping like and some people believe that their Rigetti Computers, they've read information about that stock that it will go very shortly to $350 a share. It's trading now, it's slightly over $40 a share, although 2 weeks ago it was under $20 a share. So that reminds me somewhat. Remember, there was a meme stocks a couple of years ago, which were GameStop. There was AMC, which were going crazy to stratosphere. However, then very shortly they corrected themselves quite sufficiently. Do you think that it's possible that it will happen to this type of stocks like quantum computing? Because what I read about quantum computing is that this is uh, quite enticing name, quantum. People believe that quantum is, well, it's the future of the mankind. That's a quantum. But then when I read carefully what it is, in fact, um, these computers, any computer or laptop that you're using today, they're much more powerful than so-called quantum computer stocks, except that in certain applications, they could exceed the normal computers. But judging from their stock valuations, that would make me worry. What do you think, Jim, about this phenomenon?
Well, as Robert Feynman once said, um, if quantum mechanics doesn't make you dizzy, you don't understand it. But the quantum computing is in the future, and the applications that will be applicable to are things that are unclear at this moment, but they will become clearer. It's part of the leap that's going on right now. But what I think in terms of the stocks that you mentioned is that it's pure speculation at this point. For example, I've been concentrating on the artificial intelligence sector, and there's companies that have demonstrated revenue, and their prospects for future revenue are great. They're reporting every earnings every quarter that are just mind-boggling and continuing to grow. So those are the kind of companies that I gravitate towards, and the ones that don't have revenue yet are, to me, just speculation plays, and they may pay off, and they may people may lose their shirts in investing in these types of stocks. So I avoid them until I have demonstrated revenue growth. A lack of debt and revenue growth are the things that I look for in these types of companies. But there's no question that the applications of quantum computing are going to continue to grow. And right now, it's in the stage of it's beyond an infant, but it's still in a little toddler stage. It hasn't yet to reach its full potential. And when that becomes clear, what that potential is, it will be a game changer. And those companies that are poised to profit from it will pay off. But it's not clear to me that this is the time.
There's something interesting also happening with, for example, Oracle. Uh, they've jumped on earnings 30% a
Yes.
day. Company of that size, it's unheard of. And yesterday, or the day before yesterday, they made an admission that their colossal investment, believed to generate 70% of the mm, profits, 70%. In fact, in the last quarter, it generated only 14%. This colossal investments of hundreds of millions of dollars and believing that their margins would be 70%, and instead they're 14%. That makes you think about all this play. And now we're coming to the most interesting one is what did OpenAI? First, they got. Sometimes I feel confused whether it's $1 billion or billions of dollars. Nobody cares these days anymore. But NVIDIA, I think they made investment of $100 billion. The number is so colossal that
Yeah.
it's difficult to comprehend. And then a few days later, OpenAI made a deal with AMD.
AMD. Yeah.
So what? They're taking money from NVIDIA and then putting them into AMD. How does it work, Jim? What do you know about this deal?
Well, AMD is giving OpenAI a waiver to buy 10% of AMD, which is a substantial amount of the company. But
Not buying
AMD,
for nothing. 1 cent a share. It means nothing, in my opinion.
and but AMD has popped recently, and we had my wife and I more shares of AMD than I wanted, so we sold half.
Beautiful.
And MRVL, Marvel, is also a stock that I've been investing in and touting, and it's up 40% in the past month.
Yeah.
It's reached my target, and so I think instead of selling all of it, I think I'm going to sell half again,
Yeah.
and
Very good move.
to keep into take money off the table, play with house money, and if it continues to go up, I won't kick myself because it was I think it's a smart move to make. Taking half of the money off the table when it's jumped at such a high rate, and but in Nvidia, I'm not taking any money off of Nvidia. Nvidia is up almost 11% in the last month, so it's still going strong, and so I see it going over 200 again. Who knows what's in the future for that? But
Well, don't forget they have earnings.
I love my screen; it's all green.
Excellent. And the earnings NVIDIA has at the end of November. So actually, we are getting closer and closer to their earnings. And
Yeah.
based on their moves, like investing millions of dollars into Intel and billions of dollars into OpenAI, I think that there's so much into cash that they can probably buy the rest of S&P 500 put together. Bill, what do you feel about S&P 500? How is it doing?
Me?
Yeah.
Yeah. I sound like a broken record. I keep saying that I follow the advice of David Svensson, who said we should have an asset allocation between cash and the general market as a whole, an exchange traded fund which tracks the US market, and SPY happens to be the best of all. And so I'm saying that all the time because that way, when the market goes up, our members take profits to reestablish their asset allocation of 50-50. 60-40 is also good, 45-55. And when the market goes down and it becomes a bargain and they got a lot of cash, they're buying bargains. So you're constantly taking profits, constantly buying bargains, and that's a difficult thing to beat. So I sound like a broken record because I'm saying that all the time. But I have something else to say today, which is not going to be a broken record thing, and that is that the market is hugely overvalued. Hugely overvalued. Now, a trend is more likely to continue than it is to reverse itself. But trend reversal is one of the few absolute certainties in the market. So the market is overvalued. And so I checked this morning Wall Street Journal and ChatGPT to see to what extent is the market overvalued. So if you take a look at Shiller's cyclically adjusted the price earning ratio, the market is 60% overvalued. If you take the Buffett indicator, the market is 90% overvalued. If you take the historical price earning ratio, the market is 60% overvalued. That's worrisome. So it will reverse itself. And so people who pick stocks like you do should be doing it, because you're going to run into problems if you use Svensson's advice, which is to have a 50-50 asset allocation. And then when the market tanks, you'll be buying bargains and you won't have to worry about stocks. When the market tanks, your stocks might do better, but the chances of that are pretty slim. So we advise, don't pick stocks. The market is overvalued, enormously overvalued, and it's only a matter of time before it tanks. To our members, that means nothing, because we will be buying bargains. Your individual stocks are very likely to tank with the market.
Well, I'll tell you now Sasha Star's opinion and what he's doing about this overvaluation.
Well, Star is your name, so we better listen to you.
So while I'm still holding Nvidia and a few other positions, now I'm getting more and more into shorting stocks or buying instruments which will go up in value once that correction possibly will occur. Now, if not, then okay, I'll just keep taking profit. Oh, by the way, I got very good news just half an hour ago that the NVDY that I'm holding still very large positions, 15,000 shares, from middle of this month, I think 15th of October, they're switching from every 4 weeks dividends paying to weekly payments of dividends. So that's really great news. So instead of waiting for 4 weeks, it's a long time. Now it's just 1 week. So today they announce they're paying something like 74 cents for each share. Okay, on Friday we'll get the cash. And then after 15th, it will be weekly payments. So I'm ecstatic. So let's see if, say, 74, 72 divided by 4. So it will be, what is it, 50, 14, 16, 14, something like this. So no more than that. Why am I saying 14? Okay, 74 divided by 4. It's 1, 3. I don't know. I should have my calculator, although I used to do it effortlessly just recently.
Yes, I understand that.
Yeah. Okay. So 74 divided by 4.
So that stock hit high in August and then hit a low in September, and now it's back up. It's right between the low and the high, and that's just in terms of the key indicator there is the as Sasha mentioned, the dividends that it pays, it continues to pay now weekly.
Okay, it's 18.5. Finally, with the calculator, I figured it out. It's 18.5 a week for a share that initially my cost is about, what is that? Okay, what's my cost? Is about 19 cents. Oh, sorry, no, it's not. It's absolutely not. It's $19 and
Yeah.
9. So it's almost okay. To make it easy, 20. It's under $20 a share. And if you are collecting, okay, even we'll take for example like this one, 74 for 4 weeks. It's tremendous, and sometimes I remember they were paying sometimes over $2 a share, and then sometimes last month it was less. It was 68 cents a share. But regardless of that, I figured out that very soon, in the next maybe 2 3 months, I will get back all my money that I invested, and I still remain stock which pays now weekly dividends. I don't know. Am I missing something here? Jim, what do you think?
Well, I bought it as you suggested. The other one was we talked a long time ago about CONY. That's
Mhm.
a little bit better this month, but it had a bad August and September. But again, it's not the stock price so much as the dividend. The dividend percentage goes up when the stock price goes down, and shrinks when it goes up. But you know, the constant paying of the dividends is the appeal of those. And I don't have the position that you have in NVDY, but I did take it, uh, and it's been a very pleasant experience so far. And also about the asset allocation and stuff, I moved some money from stocks into cash in August, anticipating kind of a rough September, which we did have. Um, and so you can do that and own stocks at the same time, just keeping your asset allocation the same. Um, and so the individual stocks have been quite, the S&P is up like maybe 4% this month. And what I'm talking about is like 30%, 25%. You know,
Yeah.
these types of things are, if you're more ambitious, but the thing is you have to be agile. You have to be watching. It doesn't take me very long to get caught up in the market. Um, in the stocks that I'm interested in, because I have a fairly narrow sector that I'm really following, and it doesn't take. But I didn't anticipate what happened with AMD, but we were invested in it. Intel has also done well.
Yes.
Um, you know, uh, Again, I thought it was one of those dusty old companies, and I took a couple positions in it because I wanted to keep track of it because they've done a pivot. In the Biden administration did the CHIPS Act, which
Yes.
benefited Intel a great deal, and so their pivot seems to be doing some pretty well. So stocks like Intel and AMD, which were kind of the old chip makers, have successfully pivoted into the artificial intelligence industry. So they're producing things that matter now. And the things about the stock price, the stock market being overvalued, by historical standards, that is true. But the stocks that are investing in the current market, like the old market was based on manufacturing, which we shipped overseas.
Yeah, right.
And so what's going on now in this country are the companies that have done a successful, like social media companies like Meta. We're talking about Google, Amazon. That's it doesn't really go by historical standards. That's not of much use when it's predicting Amazon's value, because Amazon cornered a market that was non-existent 20 years ago. And so these companies now, like NVIDIA, are they're no longer trailblazers because everybody is rushing to get into this sector, but they got such a huge market share, and there's no visible evidence that this market share is going to shrink, or the need for what they're producing is going to shrink. The need is going to grow by all accounts.
So, Jim, it would be wonderful if somebody would invent a special, um, maybe not mutual fund, but rather ETF, uh, S&P 500 minus NVIDIA, Amazon, and Meta, and a couple of other stocks. And
Wouldn't look very good. That's true.
yeah, you could short a hell of
You know,
much stock.
what we need to be concerned about is the fact that empires have a 100% failure rate. History shows that. The 15th century belonged to Portugal, the 16th belonged to Spain, the 17th belonged to Holland, the 18th belonged to France, and they still think it does. The 19th belonged to Britain. 20 in
And
the United States, and it's going to fail one of these days. So what are we going to invest in when the United States market fails? And so uh, Case Shiller run uh, program which shows the market valuations of real estate in 20 American cities. And New York City, for instance, has appreciated 5% last year. And so we could consider real estate as an investment. The trouble with real estate, of course, is it lacks liquidity.
Well,
Uh,
ETFs, which invest in real estate, they don't lack
oh, no,
liquidity.
no, that's true. You know, you can invest in real estate investment funds, but they move with the market.
yeah,
Market tanks, they also tank. So you have to invest in actual real estate. And there are some cities where it's been working. Trouble is that it lacks liquidity. For instance, my wife and I have investment property that we've been trying to sell now for 2.5 months. The condo that we happen to live in now was for sale for 3 years without moving. That's the trouble with real estate. But that could be an alternative because
but
when
location, location, location. In the San Francisco Bay Area, when all this money from Meta, from Apple, all this money came in, people were buying homes above the asking price, and
yeah,
the things were not on the market for a month. So
oh,
they were just
yeah,
scooped up. So that's kind of cooled off a little bit, but it's kind of where. And the thing is renting right now is so mind-bogglingly difficult. That scrape together the money to buy a studio apartment it's flabbergasting. So if you can get into real estate, I think it's a safer bet, and it's one of the first things that I did invest in. And but now I have discretionary money that I can use into what we call a fund account, where we can invest in things that interest us, things that we have knowledge of, and things that we think we actually are ahead of what the general public thinks and in our analysis. And so that's the way that I've been beating the market. And you think most people think they know more than they do, and that's how they get into trouble. And so I am always cautioning myself to and so this is why, like for example, with the AMD and with Marvell, I'm taking half off the table.
Hey,
Because,
Tim and Sasha, I have good news for y'all. Apparently, there is from Business Insider. There are some folks that are doing what Sasha wanted to do, which is having folks monitor these things. Because there was an article that actually came out yesterday that said there are 8 AI stocks that are worth 4.3 trillion more this year. That's 15 Coca-Colas or 20 McDonald's. So they've gained a combined 4.3 trillion in market value this
why
year.
wouldn't you be in
Nvidia
that?
alone had added 1.2 trillion as high hopes for its microchips have sent its stock up 38%, but other ones included Microsoft, Alphabet, Oracle, AMD, Palantir, Broadcom, and Meta, which also have surged in the AI bull run. And so, to your favorite person, Warren Buffett, definitely Milan. It says it took Warren Buffett nearly 60 years to build Berkshire Hathaway into a $1 trillion conglomerate. 8 AI companies have together gained quadruple that in market value in just over 9 months. And those are the ones that I just listed. So apparently they are tracking this, and they say whether you think AI stock will keep booming or bust like the dot-com bubble, the growth of these companies have been unprecedented. So there are folks that are tracking what you want done, Sasha.
well,
This is exactly why we call the show Modern Investing. Warren Buffett is not a part of modern investing, guys,
oh,
because what he did was right 60, 70, maybe 150 years ago is no longer working today. It's just thing of a past. And any 15 years old with a computer and account at the uh, mm, one of this brokerage league, who
yeah.
did, for example, he can make all the money that Warren Buffett was working for 50 years. He can do it in 3 months. That's what's
I just checked today about Berkshire Hathaway,
yep.
about BRKB, and it's trading at about $500. And so I asked analysts, a group of analysts, uh, how long will it take before it starts trading at $516 where I needed to be to break even because I bought it as it dropped. And many of them said it'll take less than a year to surpass that level. So the prospects for Berkshire Hathaway are positive. Now, back to real estate, which is important because when the market tanks, empires have a 100% failure rate. It's time for the American empire to fail. So investing in real estate is the place to be. And as James said, I think you're quoting Zeckendorf, who said there are three things that matter most when it comes to investing in real estate, and they're location, location, and location. So there you are. So
Uh, Tell me, please, Milan. So you believe that once the stock market will fall, sooner or later it will happen? So you think that real estate will be immune to that when US dollar is going down every single day, when the gold and silver are flying in all-time high. Gold went up in 2 years more than S&P 500 or any other indicator. So you think that real estate will be immune? I don't think so.
gold, the interesting thing about gold is it fluctuates. And the interesting thing about it, it retains its purchasing power. That is, a given amount of gold 5,000 years ago would buy just as much wheat, let's say, or barley or any commodity as it does today. And it does that reliably. So, from that perspective, gold is valuable. It does fluctuate. You can make money and lose money. And so, every,
Milan, I'd like to disagree with you because gold, which was cheaper 2 years ago, twice cheaper,
uh,
it would buy a certain amount of wheat. And today it would buy twice that amount because wheat didn't go up 100%, as you know, right?
well, Eric Sprott retired a billionaire playing with gold while his investors lost money in a rising market.
He
Lo-
didn't play with gold, he played with people's money. All
Well,
he was doing was managing other people's money. That's how he became a billionaire.
yeah, asset allocations is really what matters.
Oh, asset allocation. Yes, you're 100% right. It's asset
And,
allocation.
and his investors lost money in a rising market. It takes special talent to lose money in a rising market, but Sprott had it. Yeah.
Well,
Well,
do you
speaking of,
remember Dr. Schulman in Toronto? He's
Yeah.
away, but he was very famous in 80s as an investor and
Yeah.
advisor and so
Yeah.
on. And at that time, I even read one book back in the 80s about gold investing. So he said that the gold is the ultimate investor's dream. It's a beats real estate and stocks and so on. So and he had television show at the time. So one woman on the television show asked, "Look, I followed your advice. I bought so much gold, and now I'm losing half of my money. How come?" He said, "You followed me correctly. The only thing I didn't say when to buy. I just said generally you should buy gold. Maybe you bought it in the wrong time. So idea was right. Your timing was wrong."
well, speaking of time and everything like that, Sasha, one of the things, and you kind of alluded to it, Milan, that I'm curious about y'all's thoughts, and it is an investment question when it comes to assets and all along those lines. I don't know how it is in California where you are, Jim, or Canada where Milan and Sasha is, but here in North Carolina, there's a lot of people that are doing corporate development. They're doing a lot of corporate buildings and things along those lines, just like there's a lot of people that are building houses and apartments and everything like that. And I can tell you that here, a lot of them are sitting probably at, if they're 50%, I'll be surprised in terms of occupancy. So they may be overbuilding and over constructing and everything like that. So is that an issue when it comes to investment? Some of these people that are wanting to invest in real estate, whether it's houses or whether it's corporate investment, and they may think that the people are going to come, but just because to borrow from Field of Dreams, I think that was the movie that said if you build it, they will come, and everything doesn't mean that that always works and everything along those lines. So what is y'all's take on that? Just
Well,
if you build it, they will come work, or does sometimes you build it and it just sits empty and then you don't have anything but a loss of money?
Well,
You build something when you have money to build. And if you don't have your money, you have others people money. And when you have either other people money or your money, you just build to make even more money. It doesn't matter location, the purpose is just to make more money. Sometimes you miscalculating and you are losing money instead of making money. It's great if you're working with others people money. So then you have a great prospect of making money and you have no prospects of losing money because they are not your money, it's others people money. So whatever you do it with others people money.
And it's timing, as all these things are. But there's also, like, for example, Manhattan is an island with not unlimited resources, so they build upwards. And the same thing is true in San Francisco. There's a finite amount of land, and so if you want to live in the San Francisco Bay Area, you have fewer choices, so the prices go up. And so, there are places that can be expanded, but are there the populations to support them? Do people want to go to New York City? Yes. Do they want to go to the San Francisco Bay Area? Yes. Usually it's because of employment. They can make more money in those areas. And so can you build, sure, wherever you are in a rural environment, but will people come and will they be willing to pay the prices? Is there any attraction there?
The melting of polar ice will cause ocean levels to rise. Well, where will New York City be if ocean levels rise 1 inch, let alone 1 foot? Yeah, where would New York City be then?
I wish people talked about that more, Milan. That's exactly right. But that's another show for another time.
Mhm. Yeah, I think in real estate, what I would be interested to invest, although I'm not, but I would, trailer parks.
Hmm.
Trailer parks. That's the future of most of the Americans. They will live in trailers park. They will get government subsidies, and this is where it's all going. So there will be two Americas: one with AI and all these fantastic companies which are in that field. Another one, trailer park economy. And these people who will be in trailer park, they will be the winners. They will have guaranteed place to live. They will have government subsidies to buy food, and they will have probably free internet. And that's where somebody has to look at in real estate. That's my opinion.
Well, there's no question the U.S. dollar is taking a beating. The national debt is still soaring.
Oh, yeah.
We talk about empires failing, and this current administration has increased the odds of this market failing at some point in the near term, because things like tariffs, for example, are really a tax on the American consumer. Many people don't understand this. They think other governments are paying the tariffs. They're not. The companies in the other countries are charging the same thing, and the importer, people that bring the goods into the United States, either have to eat it and then pay it themselves, which is their bottom line, which they don't want to do, so they pass it on to the American consumer. So this is a tax. Don't make no bones about it. The American consumer is paying more, and the money is going to the federal government. It's not
Jim, it
going to
hasn't even started yet. It's about to start. Look at yesterday's disastrous meeting between our Prime Minister Carney and Donald Trump. Donald Trump again put all this insinuation about Canada becoming 51st state and all this other garbage. And today he's got reply from our Ontario Prime Minister Doug Ford. So Ford is now saying that there will be frozen deliveries of Canadian timber products to US. So the cost of timber, it's about 1/3 of whenever you have construction of a new house, it's 1/3 of your expenses is timber. So if it will go up in price, as expected, 20, 25, if not more percentages, each house will cost thousands and thousands of dollars more for Americans, and all that result of one man action, the convicted criminal Donald Trump. That's all there is to it.
But one good thing that Hitler did was he shot himself. And Trump is not going to do that, but one of these days he won't be around anymore. And so we can't wait because it's really causing these tariffs that he is imposing are doing a lot of damage. Economists universally agree that tariffs are not useful, except in some exceptions.
They're very targeted, right? And the idea here is that and I've said this before, is that Trump is very good at dividing our country, but uniting the rest of the world against us.
Yeah, that's right. Yeah.
That's really horrible. And what's interesting is that with the shutdown now, the stock market keep rising every single day. This is incredible.
It really is.
Yeah.
There's no precedent for it, and the market is shrugging it off.
Well, like I mentioned earlier, a trend is more likely to continue than it is to reverse itself. But trend reversal is one of the few absolute certainties in the market. The market will reverse itself, but we don't know when. It keeps rising and being increasingly more unreasonably priced.
What's interesting is that a lot of federal employees, and we are talking about hundreds of thousands of people,
Yeah.
they will not get paid this week. A lot of people
Right.
get paid, they will not. So
Right.
how it will affect the overall picture, because a lot of this money automatically flowing into mutual funds and ETFs and so on. And this
That will
Friday,
dry up.
it's not going to happen. So how it will affect continuation of the market price?
It hurts their purchasing power. They won't be able to buy as many
Yeah,
things.
people who don't get paid, how will they buy groceries and pay the rent? There is a strong argument to be made for a guaranteed annual income. It has existed in Finland and a few other places successfully. It doesn't have to be large, but just enough to buy groceries and pay the rent. And any system that can be abused will be abused. Some people will abuse that, but not many.
Because of the government shutdown, we don't have the labor statistics that we normally would expect. But all the signs are showing that job growth is slowing. It's down back to where it was around 2015. This is after years of job growth. And so if unemployment is going up and inflation is going up, we have the worst of both worlds. So the policy matters, and who you elect matters. And people have this sense that it doesn't matter. My vote doesn't count. So what? It doesn't matter who's in office. Well, obviously, we've learned in this administration, who's in charge, who's setting policy does matter.
Yes.
And we also have a Congress that has lost its spine and is afraid to be. People are afraid that they'll be primaried if they're not doing Trump's bidding, and which has been the case. And there's a reason for them to be afraid. But if they had spines and stood up for what they believed in, we would be able to. Congress could push back because we have a system of checks and balance. But right now, the executive branch is going way overboard and doing much more than it should. It should not have the ability to place these universal tariffs.
Hey, Tim, it even matters locally. We just had our local election and everything, and a lot of people were concerned about the gentrification and who's supporting the corporate people and who's supporting the developers, because it does matter with it even comes to developers into your city or your town. And we know that the local elections oftentimes are as important, if not more important, than the federal elections and everything like that. So it does matter even on the local level as well. Not knocking the federals, because the federal makes some important decisions and everything like that. You're going to turn it over to y'all so y'all can wrap it up and everything like that. Y'all can wrap it up as long as go 5, 10, 15, 20, 30 minutes. But Sasha, I have to tease you because you mentioned, and you keep mentioning it on this show regularly and everything. I think because of you, I'm going to go get help some people like you that are investing in Netflix, because there was a very popular movie in the 90s called Other People's Money. And you keep talking about other people's money. So I think I'm going to go watch that movie and everything. It's Danny DeVito, and it was also a great song. But I think I'm going to go watch it.
Hey, I'm playing with house money now.
Well, I'm playing with other people's money, meaning my Quest Trade account, where I have no my money anymore, and I'm playing with others people money.
Yeah.
I can confess to that. Interesting, just to last point, yesterday in my program with Mark at 5 o'clock, it was discussion how long possibly could shutdown of government last. And as you know, the Democrats, they're fighting for this Medicare and
Healthcare.
islands, so Medicare, simply because people cannot afford to be without medical care. It's just amazing that they're talking about all procedures costing thousands of dollars, $12,000, $16,000. I have my MRI scheduled sometime mid November. I don't remember exactly the date. And you know how much it will cost me? $0.00 because I'm covered by it's
I'm, I'm on a medication which costs me $14 dispensing fee, and
yeah,
which the United States costs $29,000 a month. Leading cause of personal bankruptcy in the United States is healthcare costs.
Yeah.
Doesn't
it's,
that that way?
so what I was saying is that if Democrats will play their cards right now in Senate, I think the Republicans have 53 votes to reopen the governments, but they need 60. So if Democrats hold on to this 43 votes that they have and they control, and they will not yield even one vote to Republicans. Basically, they can hold that shutdown for months, not weeks, months. And then ultimately they can demand, okay, we will vote with you, we will reopen the government, provided that Trump will resign as the president of the United States. You agree to that? Oh, you don't agree with it? Then it's gonna be closed for another 6 months. Ha ha ha. They will do that, then they can screw Republicans big time just by doing nothing, by just holding on to their 47 votes. The Republicans have 53, including a few Democrats like Fetterman, some others. But that's okay. The other 47 they still control. Just don't even show up in the Senate. Just stay home, watch Netflix, enjoy yourself.
Well,
And just,
Richard Nixon had the class to resign, and he wasn't convicted of any felonies.
No, he would have had he not resigned. Richard Nixon would have been impeached out of office if he didn't resign in time.
Impeached is different than being convicted of a felony, which
Oh,
Donald
yeah,
Trump has
right.
been. And so yeah, Nixon did resign facing impeachment when he lost.
what a great
The
situation.
Watergate thing, yeah.
Yeah, I'm
You're-
blanking on the senator from his name, but he came up and he said, "You've lost me," and that was enough for Nixon. If he had lost that guy's support, he resigned. But Trump will never resign.
No.
That's out of the question.
The Republicans have Article 25. If he is incapacitated to hold on to the office and he cannot comply with his duties, they can just remove him, just outvote him on Article 25.
That's correct.
The only problem is that they are such a cowards, also the Republicans. They're scared of Trump more than Hitler, Stalin, and Napoleon put together. That's how scared they are. But okay, shutdown will teach them something, I really hope.
According to some healthcare workers, Trump has major cognitive decline, and maybe he shouldn't be doing what he's doing.
Probably. Well, that's Article 25 could remedy that.
Yeah.
Okay, guys, I would like to thank you very much for today's program.
Thank
and
you.
Enjoy life. Keep your investments up, and just keep watching it, just in case if something will happen. Please be aware of that. But so far,
It's a little red now.
yeah. Just keep going, and just keep going. There's no worries about it.
Yeah.
Thank you again, and see you next Wednesday, same place, same time. Bye bye, everybody.
Always a pleasure. Thank you so much. Bye bye.
Thank you. Bye bye.